Here's how I stand to make over $80,000 on my first real estate purchase, and why I am considering selling. Thanks for watching. Please click the like and subscribe button. On my first real estate deal, I've already made about $49,000, with the potential to make another $33,000 if I sell today. Here's the decision process. If you recall, I did a video about how I bought my first investment property. You can see a link to it here. But as a quick summary, I bought a condo to live in back in 2011, with the plan to rent out after eventually moving. I know what you are thinking. Condos and HOAs are not good for investment properties. While that may often be true, this is a deal that I made $14,000 in cash flow and $35,000 in principal pay down. For a $49,000 total on a mere $20,000 down payment, this deal is an example of the benefit of owner-occupancy financing, with only 5% down plus closing costs. And I plan to sell it now for $33,000 net profit. Let's run through the deal and hear why I am considering selling. Again, here is my first deal from 2011. And it's now listed on the market for sale $320,000. So this is a complicated deal to do a post-mortem, since I lived in it for 5 years, but let's talk about it. As it is a good return, and not an area that I would typically expect. Yes, my first deal was a condo that I lived in from 2011 to 2015, and then rented out from 2015 to 2021, with a sale pending in early 2021. Yes, for all you tax experts, I am going to do a 1031 exchange, but let's talk about deal numbers. My purchase price, $267,000. My down payment, $13,350, 5% down. This was the benefit of owner occupancy. Closing costs, $7,000. Annual expenses, the property was positive cash flow, around $200 per month for the 6 years. So all of the expenses already netted down. This produced around $14,000 in cash flow through that 6 years. The sales price, $320,000. Estimated net price after broker fees, $300,000. 5-year rental cash flows, $14,000. 5-year principal paydown, $34,000. You don't have to be a mathematician or pull out a calculator to dissect this deal. Pretty strong ROI. Around $20,000 down, to get $34,000 in debt reduction, $12,000 in cash flows, and $33,000 net profit on the sale. So then the question, why are you selling? So here is why I am considering selling. 1. The demand for single-family homes in this area is up. And so is the market value. 2. I have some great tenants moving out. The turnover gives me a good opportunity to test the market. 3. This property is located in New York State. If you're unaware, there is an eviction moratorium in New York, which poses greater risk to property owners. The time and effort required to select and vet any new tenants will increase. 4. I also have the opportunity to get greater returns in another investment. By leveraging the equity in this property, for a greater size building. With that comes the opportunity for greater cash flows. Selling and buying something bigger will provide a greater return, for both my time and effort. I've discussed my views on the benefits of multifamily versus single family in other videos. Please take a look. 5. Selling this property also gives the ability to use a 1031 tax exchange to efficiently transfer to another building. 6. I would also like to consolidate into more localized effort and region, as this property is not close to any of the other rentals I own. It's a tough decision. If I don't get my asking price, I will likely just keep it as a rental, as the rental market is stronger than what I was historically getting in rents with the prior tenants. Now, the rents are able to get $200 to $300 more per month. This will help the cash flows, and this property was historically very little effort. Would you stick it out and keep renting? Or sell and take the equity and 1031 to another multifamily building. What do you think? Thanks for watching. Please like and subscribe below.